Yeah. Okay, this is just a quick addition and almost a summary of what I wanted to cover yesterday. Okay, so when you enter on the market here, let's go to this chart for example. I have many cycles, many time frames, therefore many entries. Okay, so what you want to do always, this is your trading strategy and it should be. You shouldn't really have take profits. You can scale in and out of your positions by a small fraction or percentage. And if that proves to be the right thing to do all the time, so let it be. But let's say that you're following a trend here, like the 89 right now. 89 is about to come up here, and when it does come up, if we're still below the moving averages, we're going to be defined in a bear market or in a bear trend, in my opinion. We're still in a bear trend, but I think that the price can pop up here and retest the 89 moving averages. I base my trades pretty much off of the trends. So obviously this is going to be kind of a video that I try to keep to myself now because this is my strategy. So therefore, 89-minute chart, for example, it could be uh, anywhere within this bull cycle that I have here. So this one here as well. And whenever that everything becomes bullish, that we're above the moving averages and you follow your rules, I don't really care about bullish divergences, but it helps to increase the probabilities of success. But that we're above all these lines pretty much right here, all these lines and the moving averages will prove to be the best. Look, 1, 2, 3, 4, maybe 5 waves here. This thing would basically, this is Philicon's strategy for scalping, would go to the 382 and then come back down. That's exactly what happened. And that's what seems to be the case. And then forms a flag. Maybe I'll do another one, but usually does break downwards. So I can look for a selling opportunity, which would bring me down to the lower time frame charts. But the thing with this is that we already missed out probably on a decent amount of time um, for 13% in 4 days. Um, but regardless, so this is part of the strategy, but this is the hour charts. Let's go to the 55, the 13, and the 3. Now, your stop loss here is going to pretty much um, it's gonna be a trailing stop loss. So for example, right here, let's say that you entered the market when you got a bearish crossover, okay? So here was your bearish crossover. I'd like two personally. So boom, you just got it, and then you got whipsawed right away. And then came back down. Maybe at this point you want to chase a retracement because you know that the first crossover is usually just um, there to fool you. So 61.8, it tries to go all the way up here, but 61.8, you can put a stop loss right above the top here, which would give you 3%, which is my max pretty much stop loss. I'd go 5%, but 3% for sure is the last. So I mean, it only went uh, well, 2%. No, it went about 1% away from your position and then finally confirmed, so you can start adding here. So guys, this is a small time frame, right? This is a small time frame, and this is not even a very good um, market to trade this time frame, I think, because it's not showing a clear trend here. So you have to really understand when to enter. What's the best time to enter in the trend? So for example, here, let's say that you entered right here or down here, and your stop loss was 3 bars, okay? It could either be 3, 13, or 55 on this bear market cycle if you're shorting. So 3, 13, and if you find, by the way, this is VeChain, if you find that the bull market cycle works better for shorting, then so be it. It doesn't whipsaw you as much, which would be the case probably because of the fact that it's a higher time frame. But then also you'd have bigger stop losses, but you might not get whipsawed as much. So that's where you have to find kind of the perfect balance between the two. So for example, this is a large stop loss on this time frame, right? But it is starting to get trailed downwards. So right, the 55 is right here. This is the 55 right here. That would be your stop loss. But I'm not really willing to give it 5% or 10, 13, 14%, right? Sure, you're giving it some room, but it could very well do that. So I'm not going to take that chance, the end pattern. But so the 13 is right here. Now, so these are pretty much stop losses right here. This would be a pretty good stop loss because of the fact that it's right on top of the last moving average. Now, if I use the 3, it might be a little bit too tight right here, right? It might be just a bit too tight. Like here would have been safe. Let's just try to find it, right? So this is the 3-hour chart on the 3. So nope, you still wouldn't have got hit. Would you have gotten hit right here? I think you may have gotten hit. Hey, maybe you want to add a rule to it and be like a little bit more than the 3, because you would have got hit right here, and that would have been pretty much a trap, a snare, call it that. So again, with this right here, it starts trailing downwards, and you might have gotten hit. So the main point that I'm trying to say is that you want to have a trailing stop loss, and you want to keep trailing that stop loss, and you want to also add to your strategy, or add a pyramid to your and another main thing that I want to say is that you can't use many time frames on a trade. Like, you have to stick to the same time frame. So that's very essential, very important. So like if we use the 13, which looks like a very nice trending time frame right now, as you see that the candles are getting you know, right here. So like basically right here would be your stop loss, or right here, depending if you use the high or low, but that would be a resistance candle right in here. So if you want, you can try to add on this moving average. Okay, so yeah, I'm just trying to build the strategy and really understand that, look, if you enter the trade right here, or on one of these candles, and you have a stop loss here and it goes in your direction, you want to guarantee pretty much your profits right away. You want to break even and not lose any money if it does turn back. So that's why I like having this strategy as the trailing stop loss. And right now our stop loss would basically be right here on this time frame. Now if I keep going on a higher time frame, when it's consolidating, that's a smart strategy. See, on this one I wouldn't be comfortable with it because it's not yet good, but once it's tight like this, you're getting small candles and the trend is easily defined, then you could, but I would look at this chart. I don't know if I would trade this chart, because this is a bear cycle first of all, right? And would we have gotten hit at all? So that's basically what my strategy is all about. Trailing that stop loss and knowing when to add, right? So when would I add? I would probably add right here on this candle. Yeah, right here I would add. Say that I got right in on this trade here, I would add on this candle, and then come through like this. I'd add on this candle, more than likely, because the stop loss starts to get really tight here on the next one. So I would more than likely add once it starts to break down here on this candle, because what happens is the flippening, right? So once we're here, look at that huge stop loss, and then we flip on the next candle, and this is the one that it automatically became a bullish thing. So that's where it's kind of hard to differentiate, but that's where you want to add to that. Okay, so would I add right here? Well, that's what the strategy is calling for. So we go all the way down here, and then put a stop loss here, and then let's say right here. Basically, we would actually have gotten hit probably. To be honest, I'm not sure how that would work. I'm not too sure how that one would work. Let's take a look at the 13 and how that would have, um, did on our strategy here. So that would be our stop loss all the way there. Okay. But yeah, automatically would have flipped right here. That's the thing. But it's still underneath the moving averages. Um, you know, like you getting a little that could have fooled a lot of people, right? That's like a bear flag, decreasing in volume. Um, our size at 50, it likes to bounce at 30 to 20 in a bear market. What are we at right now? Look at the volume right now. It's just declining. I would like to see the crossover, but that MACD looks like it's getting stimulated right now, stimmed. So yeah, I missed pretty much all of this. And the thing is, let's just go to ADA for example. Here's my mistake. I shorted this, I shorted Link, I shorted ADA, but I didn't stay in any of them for long enough to actually realize some decent profits. I think in VeChain I did 10% in one day, and I took my profits. I think it did bounce back. Or Link, I did that in Link. I think it was 10%. I have good readings on Link. For the strategy as well. So it's the same thing, right? It's the same damn thing. So let's say that you're trying to get an entry right here, right? So your stop loss on the 3-day chart, which is kind of large, and I don't know if it'll work. Sorry. But let's just say it's right here. Man, come on, doc. Gotta take off the magnet tool. But it would be pretty much in this candle right here that you're trying to. But the thing is, we're above all the moving averages right now, so you would see, well, and the next candle in 2 days, if we pass this, then downwards, then I would sell. Okay, I would sell. But right now we're still in this candle. Regardless, I'm still building this strategy, and I'm still trying to figure out what is the best way, because if I go on this time frame, like if I flip them up, right, it gives you different entries and different exits as well, and I use my exits as trailing stop losses. Like sometimes when the very volatile markets, like 17% days or 10% days, you can use the 3-minute chart and make 5% up and down, up and down, up and down. And that becomes very profitable as you use a trailing stop loss. And the market looks like this on the 3-minute chart. So basically you would have a stop loss below this low to start, and then it would trail upwards on a long position, for example. Maybe I would use this one, maybe I'd use the 5-minute, but regardless, it never gets hit, right? Never got hit. This one here, like on the next one, it's 3. So again, I'm not sure how we're gonna manage the flippenings, but usually it would just pretty much, use this one until it breaks the high, I guess. This is the high, and then you use this one right here. Maybe you add to it right there, and you aim for the EMA to scale some out, and then you try to look at that triangle that happened within the RDMAs, A, B, C, D, E, and then came downwards and upwards. So that's very, very choppy right there. 3-hour chart on Chainlink. Wasn't watching it at that point, but I would have got whipsawed unless I'm using a smaller time frame like this one here, Like, this is the type of trends that you want to see. Let's see if it's even worth. It's about 0.41, but let's just say it was 4%. Let's just say, okay. And here's 3, and it starts to trail upwards. So basically, if you entered on this candle, you'd be in profit, a guaranteed profit right here. And this would be your stop loss. See, I already have these things written in my code for the 3, the 13, and once it starts, the 13 starts to go like that, then you're pretty much good, man. Like, but that's gonna happen in about 14 minutes. And about 24 minutes, where the 13 is going to be at the bottom and usually start to trend and maybe, you know, get a crossover with this one and this one, which are important variables. Let's go to VeChain. Okay. So again, if you entered the market here, you can try to enter here with the stop loss below the low right here, this point. But I would use a trailing stop loss, so it would have moved, unless you're using the 5-minute chart. Okay, 5-minute chart. And then you pretty much move it upwards as the candles start ticking. So the 3 would be right here. That would be your stop loss, and it moves. It moves with time. So the next candle that opens right here, so, you know, this is your stop loss. Say you bought the breakout or you bought it here. Your stop loss is about, let's see, 0.2. By the way, these markets are not worth trading right now on small time frames, because you're going to get whipsawed, and the fees for me cost 0.2. So I'm not down to trade for nothing and waste money and time. So it does look like we're forming a bear flag. Here's the 3 right now getting hit basically. You can add rules like a close above. It seems like we've been coming downwards and wicking downwards as well. Getting some thick volume here, and we'll see. So buyers are kind of a little bit in demand. Let's finally take a look at BTC to try to wrap this video up. Seems like the videos always, you know, tend to stay a little bit longer for a simple topic of trailing stop loss, but I'm trying to figure out what is the best way to do this, and do we scale out of these moving averages as they prove to be good. They prove to be good all the time, that they're trailing downwards. We can add to it, and if we're going long, then we can take some off, but know when not to. And when they start to cross over, the trend has basically changed, the trend following indicator. So the stop loss once again would be at the bottom here. Yeah, same thing here, but you count 1, and automatically, this is my question, what do I do when it automatically flips bearish like this candle right here? Your stop loss would have been right here, you would have got hit right there. Maybe you would have taken a small profit, but regardless, I might like the 3-hour charts, because for now anyways, because this is chop, it's hard to trade on chop. By the way, I do have a beautiful trend on VeChain. Those looks like pretty decent candles that I might actually take the trade. But the thing is, on VeChain, we're below the 1444, and I was not expecting us to break it. So I did have a trade along, and I closed it, no problem. Took a stop loss, 1% of account balance. I think there's liquidations going through my notifications on my account here. So if I wanted to take the trade, I have to understand how to do so and where to take my loss, my stop loss. The market still looks bearish, man. Like, what the fuck do you want me to say? Right? But within the last 8 minutes, we did just get 0.5%. Volume's coming in. But to me, this looks still like a bear flag. To add to the strategy with time and timing, I'd use this trend line, also use it kind of like a stop loss or help, not a hindrance, of course. but on the way upwards. So if I go back to the 144 and show you my drawing that I drew, it was right here. This was supposed to be the reversal candle. Why, you ask? Because if you go in the past, we are starting to trend upwards with the moving average. So to me, it seems like we're in a weak position in the markets right now. Okay? We're in a weak position in the markets right now. So here's the 144 right over here. Probably in 30 minutes it's going to stop. It's going to start to downtrend once again. But that could be true or not. We'll see. But that was my drawing, and it did not work. If we pass, wave becomes 3 of 3. So we did pass the 1618, and I believe that this is a third wave of 3. Okay, something like that, like a 1 2. This is a 1 2 3, and I don't think that we're gonna pass go right here. This is go, so I would sell it, and probably it'd be like this: A, B, C. Yeah, right around here for the 5. But even that wouldn't be worth it. Well, 5% is pretty worth it, I guess. Sometimes you got to clear your mind, and I really have to understand this trailing stop loss because it's a formula for success. Literally, you can win way more than you lose. Yeah, you may make a lot of break-even trades or very close to break-even, but you're adding to your position, and you're waiting for that nice big move. Like this was a nice move on a lower time frame, and we still have some resistance all over the place on this time. And this guy right here is going to start to, in 2-3 candles on the 30-minute chart is going to be up here. Here's the 8-minute chart. We're still below all the stuff here as well. So we'll see. This could be a 1 2 3 4 5, and then pull back, and then that's where you want to buy. So very important to really understand pullbacks and anticipate the pullback so that you can maximize your return on these Fibonacci retracements. That's going to be it for this video. But like once a wave, for example, it could be where there's no more sellers. Okay, at the bottom of the market, there's no more sellers, and then finally shorts close their positions. People start to buy, and then we stop. Then we come back with a low volume. This is a recipe for success right here. Low volume, and then pretty much a big bang right there. Big bang. And then you just follow the trend and you add to it. So you have to be cautious about that as well. Know when to add, when to remove, and know also when to move your stop loss up and all that good stuff. So I'm still learning that. And that's it for this video. That trailing stop loss is simply probably the most important thing for a very successful strategy, because it will give you the maximum risk to reward, especially on a retracement buy. You can have your stop loss at the bottom of a trend, an end pattern, and trail it up as it starts to break out. Alright, so that's it for this video. Thanks a lot and I hope that with this time that you have increased, and this video can bring justice to all.